Dow and S&P are on track for a fourth straight month of gains, but my next guest says the market overall is entering a risk-off mode, and it's time to be a little cautious because the smart money is selling. Joining me is Barry James, president of James Investment Research. Barry, good to have you on this Memorial Day weekend especially. So I don't know if you want to pick up at all on the Apple discussion we were just having, if there's kind of anything analogous from that to your concerns overall for stocks here.
Yeah, there are some similarities, but I'd just like to say, once upon a time I was out sailing in the Adriatic in a little boat, and the wind was perfect, but I kept getting further and further away from the ship I was supposed to be going toward. And in the end, I had to bail out on an island, and I found out later that I wasn't this terrible sailor, that it was the current was moving faster than the wind would move me. And that's exactly where we are today. The wind, behind us right now is, of course, a strong economy, great earnings, Fed, support, and obviously fiscal stimulus. But the current, which is why I'm a little bit cautious right now, is made up of a couple things. We do have high valuations, which makes the market a little more vulnerable. And then we also see the smart money is selling. And when I say that, look at the companies themselves. There is record issuance of shares on a compared to the size of our economy. That's not necessarily positive. You see insiders selling pretty aggressively. And then something that's been a great support, the masses have been buying stocks. They're getting more and more cautious right now, which could lead to some sort of a pullback. And just to kind of tie all this up in a ribbon, we're seeing that already in the growth area, in which Apple kind of fits into that. In the month of May, both large and small growth down, both large and small value up. And that's just part of the transition, I think, that's taking place
it's a great
within the market.
Analogy. And I know you're a classic stock picker as you kind of look through the investment landscape, MasTec, Regions Financial, LGI Homes, all of those with industrials, financials, housing, those are in that kind of value part of the market, right? I mean, do you have to have a point of view on inflation, to be thinking through the level of bond yields and real income and all of the stuff that people are puzzling over right now? I mean, are these stocks that can perform well no matter what happens in terms of wages and price hikes in the near-term horizon and the Fed's response to all of that?
Well, nobody really knows, but we think so. Especially a company like Regions Financial, the wider the spread between short and long-term interest rates, they make the money on the difference. So that's good for them, and they're very well organized, to handle these major changes in interest rates and to respond to the strong economy. MasTec is obviously in the infrastructure area, and this is perfect for them. I don't really think it matters. And LGI Homes, I know there's some rub about the housing industry, but they know how to pass along higher costs. Their customer is a first-time homeowner, and they're very, very, not sensitive to the price hike. So as long as they can keep that up, I think that these three in that cyclical area will work well.
Shepard Smith here. Thanks for watching CNBC on YouTube.